Phillips 66 out with quarterly results. Earnings came in at $2.52 a share. That was much better than the $2.17 that the street had been expecting. Company operating at 99% capacity utilization and refining during the quarter, and it generated $1.2 billion of net operating cash flow. Joining us right now to talk about the results is Mark Lashier. He is Phillips 66 chairman and CEO. And Mark, thanks for being here today. It looks like the stock is up by about 0.5% on this news. These numbers are much better than anticipated, and it has to be mostly because of the refining margins.
Well, Becky, thanks so much for having me join you here today. As you noted, we just released our third quarter earnings, and it is exciting. What you're seeing in those results is a combination of very disciplined execution. We've been focused hard on that for the last 4 or 5 years. We've also made very thoughtful investments, and all of those things are knitted together in a very clear and focused strategy. And so thank you for noticing the improvement, and glad to talk about these results.
Well, let's talk about your realized margin. It rose to $12.15 a barrel for the quarter. That was up from $8.31 a year earlier. How much of that is just globally what's happened? How much of that is what you've added to it?
There's both dimensions. We focused on reducing our costs. We've taken $1 per barrel out of our costs over the last few years. There's a great chart in our deck that we also released that shows how we've enhanced utilization. The line is going up and to the right on our utilization, the amount of crude oil we process. The high value products, the yields have gone up. We've had record yields this last year in addition to strong utilizations, and our costs have been consistently coming down over that same time frame. So it's the magic of improving our performance, working hard, delivering better results, and being disciplined around costs, continuously improving our costs day after day, and we're not done yet. And in the meantime, in the background, what we see on the global macro is there seems to be an abundance of crude oil out there today. But refining capacity continues to get tighter as global demand continues to increase. And so that's very constructive for refiners.
Yeah, I was going to say, for you, the lower the oil price, the better, because you can get your input at the lowest cost. So we've been the beneficiaries of low crude oil prices. Do you anticipate that continuing over the next 12 months?
I think that we will continue to see oil prices where they are. I think OPEC continues to take actions. You superimpose the volatility that has been inherent in the markets for the last several years, that there continue to be pressure on crude oil prices. And what we attempt to do is we've got a global presence commercially, and no matter what the oil price is, we focus on what we can control. And that's putting the best possible crudes, the lowest cost, highest value crudes into our refineries and executing and operating those refineries extraordinarily well to deliver products to the market.
Mark, your LA refinery, I believe, stopped doing production of a refining activity this month, just in the last couple of weeks. Is that right? Is that correct?
That's correct. We processed our last barrel of crude oil in the last few weeks, and we are safely focused on driving it down and clearing out all of the hydrocarbons in that facility, and we'll idle that as we go through the redevelopment process for that property.
California's in a world of hurt. There are plenty of companies that have left the state saying it's too hard to operate there. I know we've talked about this refinery before, and you said it was the oldest in your portfolio. Didn't make a lot of sense to do reinvestments there. But I was just reading that you and Kinder Morgan are eyeing a new pipeline that would bolster delivery of refined product to California, to the West Coast, Arizona, California. I mean, is the thought process here that you'd like to still supply these markets, you just don't want to do business in California?
Well, we like to do business in California. We just like it more at the retail level versus the operating level. And that's driven by a number of things. It is inherently more expensive to operate refineries in California, but it's also more difficult to access the right crude oils. We have greater flexibility in the Mid-Continent. We have an incredibly strong position in the Mid-Continent. In fact, that's core to our strategy, enhancing what we have in the Mid-Continent. You've seen us take control of our Wood River and Borger refineries and integrate them in with our Ponca City refinery. This pipeline is a natural extension of that. Now we can bring our lower cost to competitive refined products all the way from St. Louis to Santa Monica if this pipeline comes to fruition. We've got a strong marketing presence in California. We're committed to providing energy and improving lives in California, and we see the Western Gateway Pipeline as a great opportunity to continue to do that.
Hey, Mark, apparently the world's not going to end next year, according to Bill Gates. So hopefully you didn't change all of your capital expenditure plans into buybacks and dividends to give everything back to shareholders. Are you still looking for hydrocarbons? Can I suggest you ramp up those efforts again, since we might all live?
Well, we're all going to live, and we're going to make sure that people have the energy they need to thrive. We're focused on the midstream and downstream parts of the world. We rely on the big E&Ps and the small, medium E&Ps to develop and produce crude oil. And there is plenty of that crude oil out there today. We continue to endeavor to be the most efficient processor, both on the NGL side as well as on the crude oil side.
When is peak oil, Mark? When have we moved that out? When do you really, honestly, when do you think it is? You have a number?
Peak oil?
Yeah.
I think the technology continues to improve. I think peak oil is not a real thing. I think we'll have plenty of hydrocarbons for decades to come. And I think that we continue to see demand increase for refined products globally.
Right.
We may see peak demand in developed economies, but the developing economies still have an appetite for more energy and really the right to access clean, affordable energy that they don't have now.
It's whatever they need, they should, we did it, they should be able to have it too. Unbelievable.
Absolutely.
We were going to decide. Unbelievable. We were in a position where we were, certain people were going to decide that they couldn't have it, like at the World Economic, whatever the hell it's called. Anyway. Yeah.